This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 9:04 p.m. on Sunday evening, January 24th, 2021. We're coming to the end of the first month of this year, 2021. This is our weekend strategic webinar. Welcome. These webinars are recorded, uploaded directly to the real-time Twitter feed within 20 to 25 minutes of the session ending, and sometime tonight, if not by tomorrow morning, will be live on the Clueless Trading YouTube channel for further viewing by all members, free trial subscribers, and anyone out there with an internet connection. Full disclosure, this is purely for financial education, not for any solicitation or advice. Let us begin. So welcome. We had a pretty monumental week last week. Lots of selective stocks that went up quite a bit, to say the least, including some very dramatic ones like GameStop, GME, which is still in play. Not on the long side, at least for me, on the short side. Let's see what happens. In other words, we're betting that it's going to come down a little bit after the stratospheric run that the stock almost doubled in 1 week. So that's kind of wild. People would say crazy, but that's what happens for reasons that I've explained, and I'll explain tonight again, and we'll look at the chart too. So on that note, let us begin. We have a great new member, Mike, in attendance, and then we have Rob here. Is this Mr. Anderson? Rob? Rob, can you hear us? Okay, Rob probably is having some mic issues, but good. So let me just cover a couple of quick stats here. This coming week, we have the busiest earnings week, which is the earnings for the fourth quarter of 2020. Coming up, companies will be delivering the earnings, but more important than earnings is what the companies are going to say about forward guidance. In simple English, that means what are they looking for their business prospects and their growth prospects going forward. That's the most critical part. Earnings can be great. These stocks, all these stocks have moved up from climactic lows back on the mid-March, late March, when we had the COVID-19 crash. So a lot of them are very, very, I shouldn't say necessarily very, very expensive, but they're definitely stretched to the upper end. So they have to beat earnings on a solid level, and more importantly, give guidance that is somewhat hopeful and optimistic so they can maintain their share price and hopefully move higher. We have 13 of the 30 Dow components on the Dow Jones Industrial Average reporting this coming week, and 111 of the 500 of the S&P 500 companies that are set to report earnings this week. So that's big. It's a heavy load. You're going to see a bunch of volatility on these stocks. Earnings are always a toss-up. Technical charts would only tell you so much when it comes to earnings. So one has to be careful. And more importantly, we do play earnings in the form of a basket strategy, which simply means that we buy a very small amount of calls, maybe 1, 2, depending on the price of the calls of each of the names that are selective names that I put out there. And of course, you have your own choice on the ones that you like, and you go ahead and do what you need to do. But the basket strategy generally works, historically speaking. Past performance is because, let's say, for example, we have 6 selections and we buy, 1 call of each, let's say, and so you're going to have maybe 1 or 2 that are going to collapse. Once that's going to go up a little bit, and maybe another 1 or 2 that are going to go through the roof, or maybe 1 that's going to go through the roof. So what happens with the basket strategy is that 1 or 2 that go through the roof will carry your overall return or ROI percentage on that basket higher, and you possibly land up, doing extremely well. It's happened. We have done that quite successfully. But like I said, it is a toss-up. So you have to know your own risk level before you get into earnings. And that's the best way to put it. All right. Remember, let's say, for example, you buy 1 call at $3. And in the worst case scenario, you lose that $3 if it completely collapses. All right. If it completely collapses, that's just the way it goes. Or else you lose 50% of that. What about you buy one for $3 and that one just goes through the roof? So that 3 goes to 9. So here you have a 200% return while you lose 50% on the other. So net, you're up 150% on the basket. So I'm just giving you a very simplistic example why the basket strategy works. Trying to select which one's going to go up is a very difficult game, despite how well the companies have done and how good the chart looks. Just want to be clear about that. Okay, that's all. Rob, are you connected?
Yeah, I am. Frank, can you hear me?
Yes, I can. Is that Rob Anderson?
Yes, it is. Yeah,
Oh,
I'm here.
great hearing your voice, sir. That's fantastic. Yeah, we always talk on DM and stuff, so it's great hearing your voice. So I hope everything's well. Okay, so let's move on. Gave you a little thing. We have Paul here visiting us from the northern hemisphere out there, extreme northern hemisphere out there in Canada. Welcome, Paul. So let's look at the markets very quickly, and then let's dive into a bunch of charts, and we'll try to get this thing wrapped up within a reasonable period of time, so it doesn't get too boring. All right, let's start. Get this out of the way. If it'll allow me to get it out of the way. Earnings won't leave me. All right. And we do. Perfect. All right. So here's a quick snapshot of the market. Nothing, magical here, other than we can see lots of zigzag. This goes all the way back. This chart goes all the way back to right before Christmas, 21st of December last year. You can see what we have done. A big flash crash at the beginning of the year. Moved up very nicely, made a new high. Move sideways, all patterns. These are ranges. Ranges are basically, here's your green line. This is for newer members. Here's your resistance. Here's your support. These charts are drawn beforehand, before the fact, not after the fact, as I like to point out, so you know what these roadmaps are, and you don't freak out too much during the day when the market goes through a little turbulence. You get these mini tsunamis of selling, and then you get the big buy programs that come in. So all kinds of stuff. So these charts are these are terrific GPS roadmaps to understand what levels the markets are holding and what levels the markets are basically going to bounce from. And most importantly, are the markets still in an uptrend or not? If you look at the broader uptrend, which are these two lines here, okay, these two parallel lines, what we call the uptrend channel. Let's get this thing a little bit thicker. Okay, here, there we go. These two lines, you can clearly see that we are still in an uptrend. We can still drop to 37.48, which is roughly 600 points. That's 100 handles on the S&P 500. This is S&P 500 E-mini futures. These are live futures right now, are up about 13.5 points on the Globex markets that start trading at 6 p.m. Eastern Standard Time on Sunday night. And we can see here when we look at the broader range is the upper end is 3,900, which I do believe is going to be a major resistance for this market. So that's roughly about another 300 to 350 points or so on the Dow Jones Industrial Average. The quick conversion ratio is 1 S&P point or 1 E-mini S&P 5 E-mini, which E-minis, which are the S&P 500 futures, is roughly about 6 to 7 Dow Jones Industrial Average points. So that's the way that's basically your conversion rate. So the key is that we are here right now. The bottom end of the range is 37.48. So let's say, for example, there's sometime during the week, we have a flash crash, which is basically something like this that happens very quickly. Takes about a day or so, and then starts to recover depending on what levels they hit. We have had 2 flash crashes, one right before Christmas, one right when the market started trading at the beginning of the year, okay, on January 4th. So these are not something that, are the end of the world. They happen, and they could certainly happen this week, believe me, okay? Believe me. So we're looking at about 600 points here. Certainly those will hurt options traders as well as stock traders when they fall like that, because they happen very quickly. So I urge everyone to be vigilant. I'll certainly be quite vigilant this week, like I always am, and I will be keeping you all posted throughout the day as to what's going on and things like that. Do not overtrade this week. Best way to do is to play earnings. Do not get too excited. Certainly do not get too disappointed or distressed. But just keep a very calm head. And like they say, carry on. So that's the way I look at it. But do not ask, if we get up towards a 3900 S&P level or the E-mini levels, then rest assured that you are going to see a bout of selling up at those levels. If we do overshoot, I do have another number up here that's roughly 3920. So that's another 120 points. So you're talking about 700 points on the upside on a very optimistic scenario right there. Okay, from where we are right now, right there. And on the lower end, we are looking at a 600-point drop, which can be in the form of a flash crash. All right, so just be aware of that. So, saying all that, this is the 1 hour chart that I show throughout the day. You can certainly replicate that on your side of the screens and whatever platform you use. I highly suggest that one of your platforms that you use, which is a free one, which is investing.com. So this way you can understand all my fancy patterns and lines and stuff that I draw. You can have a mirror image of this chart on your site. Let me draw this. This was the highs. There we go. Choose a green. There we go. Let's draw a support level here. That support level would be right around here somewhere, which is 3,800. 3,800. So 50 points from where we are right now, we're around 3850. Let's call it. Actually 3848. So 50 points from here, getting down to this support level, which should be on red. In red, means that you could have a 300-point drop. Whenever, intraday, overnight, you can certainly have that. So this is the first part of the week. Let's say, give or take, the next 24 to 48 hours. We should be looking at these two lines here. Okay, we should be looking at 3862 on the upper end, which is retesting the highs that were established on the 20th at around 10 at night after hours, right there. This was on the 20th, just last week. And we should be looking at this level here, which from a pattern standpoint is simply retesting the breakout level of the 20th, which was 8 in the morning, right before the market started, right there. The market took off. Big move on the 20th. Right there. Okay. And right there. And so I'll be watching this, of course I'll be watching this, is always on one of my screens. So nothing new to report here. And you can see what the support levels are and stuff, and that's it. I don't want to, beat a dead horse here. Let's take a look at the Nasdaq. This is the actual Nasdaq 100, which is of critical importance this week because of the big earnings coming out of AMD, Apple. Let's see here. We have AMD, we have Apple, we have Microsoft, which is in the early part of the week on Tuesday. We have Tesla and Apple after the close on Wednesday. A whole bunch of the other ones, but those are the ones, obviously are going to take keep everyone's attention. All right. So this is your Nasdaq 100. This is not a live chart. This is the actual chart. This is not in other words, not a futures chart. And you can see where we are. We broke out of a massive range. Okay, created a new high. We kind of forecasted that a week or two ago. It happened. Big gap open. So in this case, we will draw, as we are speaking, we're going to draw the gap fill. If things go the other way, this is what we're looking at. Right there. So any miss on Apple, let's say, or AMD or something like that, big tech company will push it to retest this gap. First gap fill is 319.83 right there. Let's call it 320, and the lower one is around 317 right there. So these things can happen very quickly. Gap fills are not mandatory, but they do happen. Retest of this line here, right there, which is the breakout line, is 323. So this is something which is a higher probability of happening. So in other words, it can do this. And these things are important because they'll drive like that, and then a bounce. And I am looking at a round number of approximately 330 or so on the QQQs as a top end, or what we call max upside on the Nasdaq 100. So nothing new to look here. Let's take a look at 1 second. Let's take a look at the broader picture of the S&P 500. Oh, we also have, I believe we have some big industrials coming out this week. We have Caterpillar. Paul, do we have Boeing this week?
We do on Tuesday, I think.
Yeah, because I'm looking to the list, and the list is so long, and I just printed it out from briefing.com. So yeah, so we have Boeing too. So, think about that for a minute. Let me see here. Boeing, Tuesday before market, because Boeing normally reports pre-market.
Yeah, it's actually Wednesday pre-market.
There you go. I found it. Yep. So we have Boeing. So we got both the industrials and the big cap technology companies all in 1 week. So this is pretty, heavy duty stuff. Okay. Let's take a look at E-minis. And Tesla, just to report, Tesla is on Wednesday after the market closes. Apple is also Wednesday after the market closes, correct?
Yeah, and Facebook at the same time, so that's a big night.
There you go. How could I forget that? Okay, it's right there. So Facebook, Tesla, Apple, that's a big night. And keep in mind that Tesla right now being in the S&P 500, it'll have an outsized move on the index. Okay, so this is your overall picture. Technically, it's a very powerful uptrend picture, both on the internals, which are moving sideways and higher. Very good. The MACDs are moving sideways and higher in the green. That's good. So all the internals are fine. The heartbeat is fine, and the blood pressure is fine. And this is the external. And the external charts, no one needs to be a technical genius to figure this out, that it's still on a major uptrend. Here's your uptrend line. I need to adjust it just a little bit. There you go. Still looking great, still breaking higher. These dotted lines are known as acceleration channels. And that S&P 500, like I said, can hit up to 3,900, maybe overshoot on the upper end. So here it's around 3,911. So everything looks good. Everything looks good. But what looks good on a Sunday night is not necessarily what might look good on a Monday night, okay? Or a Monday during the day or Tuesday during the day. So anyway, just want to show it to you all. We have a couple of support levels. One support level is retesting this uptrend line, this thick green line here. And that is approximately, that happens to coincide with this red line. For people who are technically orientated, they'll know this red line is the mid-Bollinger. This is the cloud known as the Bollinger Band. So the middle of the line, the mid-Bollinger, is approximately around 3778, which is pretty much what I explained on the other side, that we could drop anywhere from 500 to 600 points, just to retest this level here. If we do break that, then then obviously the lower Bollinger and the 50-day moving average come into play, which is 3,700. So if you do the math, 80 points down to 3,700, 80 times 7, that's another 560 points. Anyway, we don't want to project too far. I just wanted to show it to you where we are. Everything so far looks good. With futures up about 16 points right now, this is where we stand. Okay, good. Let's dive directly into stocks. So let's take a look at Apple. I mentioned Apple quite a few times last week. The trade's working out very well. When a stock goes up 5, 6, 4, 5, 6 points over 2 days, 4 or 5 points on a certain day, you scalp profits, then you buy some higher strikes. Apple calls are still reasonable. The ones which are the 140 calls, I believe, are between $3 and $4. These are the ones expiring on the 29th. You can certainly buy calls going out all the way into February and March. I'll be looking at the ones for the 29th and possibly the week after. But whatever happens to Apple will happen on that evening. Whatever the big move's going to happen in Apple will happen that evening, whether it's a big move up, whether it's a big move down. Depending on the charts, we'll decide whether we want to re-enter the trade or not. So you have a very high probability that you're going to make some money if you're on the right side of the trade. Looking at it from a technical standpoint, the internal heartbeats, the full stochastics, McClellan oscillator, and the MACD is actually starting to look good. The MACD is actually starting to look very exciting because for the first time, the MACD since the end of last year, actually has turned green. See that little green bar there? So again, people who are not technically that savvy, all you got to know is when you have a crossover like that, that's good. When you have a green bar like this, the histogram on the MACD, that's very good. Generally speaking, one green bar on the histogram precedes multiple green bars. So if that's the case, then Apple, and then this one starts to move higher, and it doesn't get overbought till it gets up towards this level and it starts to turn down. And by that time, you will have multiple green bars moving along the way. That means for each day. This is a daily chart. So if that happens, and Apple had massive accumulation over the last couple of days, these are actual volume, 1, 2, 3, 4 days in a row. We had a shortened week last week. So 4 days, it was nothing but buying. So technically, it's a very powerful chart. Let's zoom in. Here's your longer term picture. Okay. The middle of this picture is 149. Can Apple jump $10? It can. It can. It's done it before. Okay. Right there is 149.90. Let's call it 150. Apple closed at 140. If it jumps up $10 on earnings, you hit the jackpot. Because those calls, which are 140 calls in the money, will jump about $8 or $7. So you basically more than double your money. Okay. So keep that in mind. Now, if everybody's thinking the same way, maybe the market makers and the machines and the algorithmic high frequency trading programs might not let you do there because they'll suck up the premium. In other words, they will not give you where it should be. So those are games that the automated options makers, the algorithmic programs play. So that's nothing that we can do, but I'm just giving you the theoretical aspect of what can happen. So at this point here, Apple has broken out of a large multi-month. This is September. This is September right there. Let me get a drawing tool. And Mike, you being brand new, everyone say hello to Mike. A great gentleman here who was referred to us, joined us last week and started making money right off the bat. Mike, some of this stuff that we're explaining in a simple way, are they making sense to you?
A little bit. Consider
Okay.
me in the first grade right now.
No problem. But what I'm saying as in like, where things can go and things like
Yeah.
that, at least, yeah. Okay,
Yeah.
that's fine. Exactly. All right. Here was Apple back in September of last year. So Apple basically has not, it came back and retested that high just before, retested that high right before, right around New Year's. Okay, right there. right there. Then it pulled back in the new year. So if you notice, very simply, it attempted twice to break out of that range, multi-month range. October, November, December, January. This is a 4-month base that Apple has created within a range. And that range was 139. And on the lower end, that range was 105. So at this point, it's broken out. At least from a technical standpoint, it has taken out and made a new high, which is fantastic. Does it mean it's going to automatically gravitate towards the next technical level of 150? Like I explained, it's a possibility. It's a possibility. Is it possible that it pulls back a little bit, a couple of bucks before it attempts to go higher again? That's another possibility. Is there a possibility that Apple will completely disappoint? I don't particularly think so, but what do I know? One of the best analysts on Apple who has been right on it, Katie Hubert, upgraded the stock just last week, and they know a lot more, but you never know. So the bottom line is the best thing for Apple to do is to sit around here a bit, give or take $1 or $2 before earnings. If Apple shoots up, let's say up 145, 146 right before earnings, then it takes away from the big move into earnings that it should have. But whichever the case, given that we're long Apple, you're still going to make money. So if Apple moves up to, let's say, 145 before earnings, you want to sell that and buy some strikes higher than that, whether they're the 148 or the 150 or the 152, depending on your bullishness as to where it can go. The other way to play earnings is to buy a put and a call, known as a straddle. I don't want to get into it too much right now, but basically you're betting that it can go up or go down. And straddles work fantastic if it has an outsized move on one side or the other. If it stays flat, then they take the money away on the options from both sides and you come out saying, hey, what the hell happened? So you need to have an outsized move on the upside or the downside in order for a straddle to work. Strangle, whatever they call it, okay? Which simply means you buy a certain amount of puts and you buy a certain amount of calls and you're betting that it can go either way. There are other complicated spreads you can do, but that's, I'll leave that to you guys. Okay, so far Apple's looking good. I like it. Simple back of the napkin calculation where it can go. If you look at, 1 second here, let me zoom in. Oh, come on. Okay, so here is 126. Here is Apple printing a new high of 139. So that's about $13. Let's call it. Trying to get this a little bit higher because it should be. There you go. Okay, so the depth of this is roughly $50. The depth of this range right there. Okay, this white line, this one. So $15. So back of the napkin calculation is if it maintains this range breakout, this multi-month range breakout, add 15 to 140, and you arrive at somewhere around 155 on Apple before it, $15. If you add $15, this is the depth of the range, right? Like I just told you, $15. So you add 15 to the breakout, so it brings you out to 155 or so. Will that happen in one single swoop? I don't think so, because that's a lot. But anywhere from $7 to $8 on Apple is very, very doable. So it looks very good. Next, any comments, Paul? Because I know you're an Apple trader too.
Yeah, I totally agree with that 155 range. And the only question is the timing. Like I do think it'll happen probably in the next couple of months here.
Good. So what we're looking for, initial move, max best upside scenario is 150. And of course, 155 is something. Remember, Apple is a multi-trillion is a company, right? So, and Apple's market cap is what? Market cap on Apple is 2.4 roughly 2.4 trillion. So to move a stock $15 on a $2.4 trillion company is not a joke, okay? So I'll take anything between 5 to 10 points, and that's what we should be looking for. Okay, next one we're gonna look at is Tesla. Let's get this, clean this out a little bit. This is Tesla's daily chart. You can clearly see here the uptrend is very much intact, regardless of intraday volatility. This is when Tesla was $100. Let's not go back that far. Let's try to zoom in. There we go. There we go. The Tesla's internals are a little bit mixed, not as good as Apple's. It's starting to decline, losing some power here on the full stochastics. Nothing major. It was losing some power since it hit the top of 887, which is right around the corner, back on the beginning of the year. It was losing power here too, if you notice, when the stock was at 700. This line was declining down too on the full stochastics when the stock was 662. So this is not really that much of a clear barometer that it's all of a sudden going to, just deflate. Whichever the case, something to keep in mind. What is really strong on Tesla, when you look at the internals, is the MACD. The MACD is starting to cross down. We do have one single red bar here, but it is still very, very strong overall. Very, very strong overall. So Tesla is a mixed bag. It is obviously far more volatile than Apple. And if we look at this picture here, we can draw another line here. It eventually wants to go to $1,000. It really does. Whichever way you slice it or dice it, it really wants to go there. On the lower end of the scale, the hardcore number you should be looking at as a psychological as well as a technical support is somewhere in the 800 range, right there. And that's where the stock was before it bounced off selling on the 11th, right there. Okay, so 800. So I'm looking at 800. So the stock is at 846. For it to go to 800, even though it might sound dramatic, oh my God, it's down $46 from the close on Friday, it's really not that much. Because from a technical standpoint, it is still very much a bull flag. It's very much a bull flag, and I'll show you. Clearly seen here. Sharp uptrend, and it's been moving on a sideways range between the high, between 880 and 820. And that is a bull flag. It's a bull flag consolidation channel. So technically, looks great. Technically looks great. So what Tesla bulls would like to see, Tesla longs would like to see, is that we break out of this range. And Tesla is such a powerful stock that it does not give you a chance to buy when it moves. You and me all know that. It just jumps. You try to buy it, the options just explode, and you just can't catch it. So you always have to be in it to win it. And that's the God honest truth. There's a lot of these tech stocks are like that, and Tesla is always on hyperspeed, especially with earnings coming up. So net, 800 is your support level. Your resistance is the high, which is 886, rounding off the numbers. Once it breaks that, you're looking at 933. First level will be 900, which is a psychological number, but that's as good as saying 886. What's $14 on Tesla? Nothing. Can happen in 1 second, right? My channels dictate that if it goes max upside, just the way we said max upside on Apple, short term should be 149, 150. If it gets there on great earnings and prospects, guidance, Tesla's looking at 932. So 932 is roughly 90 points higher. Now, earnings are tricky business. What happens after hours? And people who have been in the market know that. What happens after hours has, in many cases, no bearing what's going to happen the next morning. In other words, the stock could be down $30 after hours. Wake up in the morning, it's kind of like, opening at the lows. All of a sudden, it just gets up and starts running. Because now there are market makers, automated algorithmic high-frequency trading supercomputers, hedge funds, all playing on the same field that you're playing on. And we're humans, right? They're faster, they're quicker, they're not always right. And they mess around with your brain. So what I'm saying is the after hours volatility should be taken into account, but that has, in many cases, a very low correlation as to what will happen the next day. Just try to be as simple as possible. Okay, I've seen that happen zillions of times. And that's just the way it goes. Even after hours, it'll be down 50, up 10, like, you know. And what you do, if somebody's completely new and doesn't want to play earnings or just wants to like learn, just put your screen on the 15-minute screen or the 5-minute screen and just watch the shenanigans. Okay, it's wild. And you see the candles go red, green, red, green. It's fantastic. Okay. There's no straight line up. And of course, there is many times straight line up and it stays up there and stuff like that, like Netflix did. But it's not. But a lot of times it's just it's like looking at an EKG. Okay.
Hey, Frank,
Yes, go ahead. I'm listening.
just while you got the Tesla chart on there, two
Mhm.
great examples of what you just said there about
Mhm.
after hours and the next day pricing. So
Mhm.
Tesla, I vividly remember the last two earnings. So
Mhm.
July they had an earnings, and after hours it was up 8%. And of course, everybody on StockTwits was celebrating and
Mhm.
counting their money before they took it. And
Mhm.
in the morning, it was it opened down, and it just had like a flat moment, or had a flat time period after that, or like kind of downward time period after that. So just totally opposite of what the initial reaction was. And then
Exactly.
the next earnings after that was October, and it actually had really good numbers. Like fundamentally, it actually had really good numbers, and
Mhm.
it exceeded expectations. And
Mhm.
then the stock stayed flat for about 2 weeks, and then we had that huge run up after the fact.
There we go. This is October. I think earnings came around this time, and the stock basically went from roughly 500, well, 469, and slid down over the next 2 weeks, like you said, all the way down to 383, and then just took off. So you're absolutely correct. You're absolutely correct. Tesla has a lot of things to talk about. Okay, now I'm going to sit here all night, explain all that stuff, but if you think about it, they got their battery packs to talk about. They got their Shanghai plants to talk about. They got their car deliveries to talk about. I mean, it's SpaceX to talk about. I mean, it's just a lot. Okay, a lot. And one thing's going in their favor with the Biden administration in power. They're heavy push into clean fuel, electric vehicles, all that stuff. So they're certainly in the right thing. And their China business is going really well. They're getting competition, but it's going well. So there you go. So, okay, so we covered Tesla. Next one we're going to look at is AMD. Okay, we are in AMD. AMD's chart is, again, in a range. The lower end of the range is the internals. Let's take a quick look at the heartbeats. This is a daily chart, not what happens during the day, but end of the day, what it looks like. Looking good. Intel just had crappy numbers and bad guidance. So Intel's loss is AMD's gain. Advanced Micro Devices has been eating Intel for breakfast, lunch, and dinner for years now, and now they seem to be really, moving forward with that. So AMD was up on Friday, not as much up I should have liked, but Friday was kind of a mixed day because of weekly options expiration. Whichever the case, on a down day it was up, and that's good. And this is what AMD is. AMD's lower end of the range is $87. Upper end of the range is 100. And once it breaks 100, somebody says, well, where do you think it can go? Well, all we got to do is move this line up. I'm bullish on AMD. That's why I suggested that we buy those calls. Calls are not expensive, which is great. Upper and max upside move is 105. Can AMD jump 10 bucks? Well, it doesn't normally do that, but I'll take anywhere from $4 to $6 any day, or $3 for that matter. Okay, so if it hits 100, great. All right, so max upside is 105. One with the other, it can climb its way up to 105, 106. All right, but I'm looking at somewhere between 98 and 100 as a post earnings pop, which is fantastic. But overall, looks great. And like I said, Intel's loss of market share in all types of semiconductor chips and stuff is AMD's advanced micro devices win. That's the reason why the stock was up when Intel was down and the markets were down. The markets were down on Friday, but for a lot, part of the reason was IBM and Intel, two of the big heavyweights on the market, were pulling the overall indices down. Okay. So I know you're an AMD specialist, Paul. You want to put in one or two quick cents about what do you think is going on? I know you're long AMD.
Yeah, I'm looking forward to their business with video games. I think that's really going to be strong. And we got the Christmas quarter in there as well too. So
that's a very good point. That's a very good point.
I think they're going to break out of the range that they're in right now. So yeah, I'm bullish as well.
The other point that I want to make in tandem with what Paul said is that the chances of AMD having a terrible quarter or coming up with something really horrible is very low. So from a risk reward standpoint, this is a far less riskier stock than a Tesla or even an Apple for that matter. Okay, just so you all know. So this is a stock that decent traders can, not indecent traders like ourselves, right? Aggressive traders, that anyone could play. So I like this one. I like this one a lot. The prospects are good, and that's it. Okay, we covered that. Let's take a look at Boeing. Now for Boeing, I am going to pull up another chart, or maybe I can pull it up here, another platform. Now Boeing is a mixed bag, okay? Boeing's been just moving sideways for a while now, okay? And there's nothing bad. There's actually more good news in Boeing than thing. So let's do a quick back of the napkin type of, here is your upper end in Boeing, which is 240 bucks. It got there a few times back in early December and in November. Got there. We caught a good portion of the move here from down here. Lower end of the range is 140. So the depth of this range, multi-month range, going all the way back to May of this year, going all the way back to June of this year. Okay, the depth of this range is 100 points, $100. Very wide. Here, we have basically created a long-winded, since it popped at 240, we have basically created a bull flag, which has now lasted for more than December, January, more than 2 months now. Okay, here's your bull flag right there. Remember, flags can look like this. Well, they don't go up straight like that. Sorry. Flags can look like this. Stock moves up, and then for a couple of weeks, couple of months, just sits in a range, going back and forth before it continues higher, most cases. Flags can look like this. These are the most bullish ones. Bull flags can look like this. Moves up sharply, then consolidates. So this one is somewhere between this and this, moving sideways. If Boeing comes up with some sort of positive guidance, and Boeing is very dependent on international flight travel, domestic flight travel, airlines buying their planes, foreign buyers, and all that stuff. One thing going for Boeing is that if there is any type of moderation in hostility with China on the trade war, then Boeing is going to be one of the biggest beneficiaries because China is their biggest buyer of Boeing planes. Okay, so that's a big plus. So we'll have to watch that carefully over the coming days. Whichever the case, Boeing generally moves within a 10 to 15 point range. So from a trading standpoint, all we're looking for Boeing to do is to go up to 220 and you make a very decent sum of money. So the 220 calls are the ones that we like. So without making any long-term predictions, whether or not Boeing's going to go up to 240 or not, because internals are mixed. They're not bad, they're not good. Look at that. Okay? Like they say, it's a nothing burger right there. It's like, it's not really telling me anything. So just moving, here's your 50-day moving average, 213. I'll take that any day. The 50-day moving average is generally a magnet. And honestly speaking, this red line here, 213. Stock moves up $8 to 213. Great. You just made yourself maybe 80 to 120% on those calls. Chances of Boeing like really sliding down all the way, well, your downside move is going to be capped $5 lower. Pretty much. Pretty much. Okay, so you got a $5 downside, you got a $8 upside, you got an $8 upside, and best case scenario, the stock goes up to 220, which is a $15 upside. So just there you go. There's Boeing for you. All right. And the chart that we use, I'm trying to see if I can drag that into the screen. Bear with me 1 second. Is this one. So of a different platform, so I have to drag it from my other screen. That's your VIX there. That's not the one I'm looking for. Is that the one I'm looking for? Where's my Boeing chart?
Hey Frank, can I say something while you're looking that up?
Yeah, sure.
Yeah, I saw a really cool news article, a video with Sir Richard Branson, Virgin
Go ahead.
Galactic, and
Yeah.
Space CEO. So what Virgin's doing is they actually split their company into two parts. Virgin, which does satellites, and they actually successfully retrofitted one of their Virgin Boeing 747 planes, and it's designed carrying passengers, but to launch.
We're having a very difficult time hearing you. We're getting a lot of beeps.
Okay.
It's but basically they outfitted one of their Virgin Galactic aircraft using a Boeing.
The 747, yeah. So it can actually launch a satellite in midair.
Oh, that's fantastic! And it's a
and
modified Boeing.
Yeah, and it was a success. And basically, they've done something that no other space company can do. They can actually scramble these 747s and get a satellite up there in 24 hours.
I love that. There you go. You heard it from Paul. All right. So yeah, Boeing's definitely, Boeing's defense program, Boeing's other aircraft, the larger ones, the 767, then their defense ones, the space orbital program and all that stuff, those are going well. So Boeing's got other avenues of revenues, but the biggest revenues, obviously, the general planes, the 737 MAX and all that stuff, which has been flying more and more airlines, including Canada, just approved approval of the 737. So it's good. So from a trading standpoint, for traders, this is the chart that I use and I show you guys. It's pretty easy to read. Okay, you got the upper end, 223.86 right there. It gets hit with big selling generally at that point. This is where we are. We're on the lower end. We got we have a support line right there. I'll put it there. Okay, which is around 200. Show prices. Yep, right there. Okay, which is around 200. And so we got the range that I just told you, 223. I'll take 15 bucks on Boeing any day. We have done that so many times. We all know that. Okay, so once it hits that, don't expect it to ramp up unless there's some big, huge, monumental news. All right, and don't worry about downgrades on Boeing coming out of these stupid analysts. A lot of one of my traders just trades Boeing and two other stocks. So every time Boeing gets downgraded, it's like, Frank, what's going on? I said, relax. And guess what? Exactly, relax, because the next morning the stock goes up because they're sick and tired of downgrades. What are you going to downgrade Boeing for at this point? It's just like everybody knows that they haven't sold enough planes. You know, it's all that stuff. So there's not, you know, even they had that terrible crash of another Indonesian 737, but it wasn't a MAX. It was a 26-year-old thing. You notice the stock didn't go down, and I did mention that too to him. That look, it's an older plane. It's terrible, but the market at this point is overlooking all that part. Unless there is a crash of a 737 MAX, okay, and not a too old a one, not one of these really old ones, the stock is going to be fine. So he's like, oh my God, here we go again. I said, no, the stock actually went up on that news because it's irrelevant. Also downgrades from analysts. They love downgrading a stock when it's flatlining or when it's lower, you know? So I say, you know, doesn't
Hey,
matter.
Frank,
So
there's
200 is, yeah, go ahead.
Oh, sorry. There's one really exciting technical on Boeing. If you
Yeah, we get a lot of beeps on your mic. Is it like,
sorry, I'm on a wireless. I can't hear the beeps that you're hearing, but I'm on a wireless
oh, I
mic.
see. Okay, go ahead.
But
Go ahead. We'll tell
just
you.
really quick, on the monthly Boeing chart, the MACD is just about to turn bullish after being in the depths down in the dungeon.
Okay, we're going to look at that right now, and we're going to look at that on, hold on a second. Let me minimize this. Monthly. Now, this is a longer term. When we're going monthly, we're going like all the way out here. Yes, and this is what Paul is talking about. It's just about to turn. Right there, the MACD.
Yep.
So this is what he's talking about. When these lines cross, ladies and gentlemen, that is a sustainable move higher despite intraday volatility. So the monthly chart on Boeing is actually quite bullish. Thank you for pointing that out. Mike, you still with us?
I'm here.
Good. So so the monthly chart on Boeing, looking at it from a technical perspective, forget all the outside noise, the news and the analyst downgrades and the upgrades and stuff like that. This is very bullish because since May of this year, this has been the MACD histograms have been decreasing, and they're about to go positive, possibly within the next month. And when that happens, Boeing starts its ascent, where it's a sustainable move all the way up towards the 290, 300 level. And this is the crossover that one should be looking for. And it looks like the big money is made before the crossover happens. And of course, you make money once it starts to move higher. So once we have established that 199 to 200 or thereabouts is the low end of Boeing, why not buy some Boeing calls a couple of months out, going into the summer? Okay, and just sit there and not look at it every single day, even though it's hard for me not to look at things every single day. Okay, because this is a very high probability that this histogram is going to go green, like here. And it's been the histogram has been the red bars have been decreasing, and it's about to go green. So you make a lot of money just the minute when it goes green. Stock is going to be $20 higher, and the crossover, when that happens, stock is going to be $20 to $30 higher on the monthly. So in the meantime, get in early and sit there. And this is very bullish too. Thanks for pointing this out, Paul. So McClellan oscillator, look at this, about to go. And when it's about to go, that's when you create a sustainable move higher. This is fantastic. Crossover happened on the full stochastics. And it's, again, you don't need to be technical. Just look at the directional bias. Turned around, going. Here's another great point. The big month of buying was November. Big boy spot. And of course, big month of buying was in June. But let's look at the recent one, November. Since then, there has the volume, overall sell volume is decreasing. And the stock on a monthly basis is creating a cup and a handle. Cup and a handle. Lower end of the handle on the monthly, it shows us 188. Okay, we'll take that. I'll take 190. Okay. And what happens to a cup and handle? Like we all technicians, we all know, a cup, this is your cup, it breaks out. So zigzags a couple points, maybe 10 points, 15 points on the wide range. Let's call it 5 points on a shorter range. Breaks out. So do you want to be chasing the stock when it breaks out? Sure you can. Or do you want to be a little bit early and just sit there? And that's pretty much it. This is your neckline. That neckline is around 240. So this neckline here is 240. This is called reading the technical tea leaves in a very simple way. You know, I'm not getting this complicated. 240. You got a depth of 120 to 240. The depth of this cup is 120 points. At 120, when it breaks out over 240 on a sustainable basis, you're looking at the stock going to 360, which is right here. And that just happens to be the time that Boeing actually broke down back in, back in 2020. So Boeing eventually is going to go to 360, one way or the other. But we're not even looking that far. We're basically saying that you can make money of these small moves here, 100, 150, 200% returns on your calls on a real company. So this is a monthly cup and handle, looks terrific, and we're good to go. Okay, let's take a look at, we looked at Apple. Let's take a look at Facebook, another monster. And specialist on Facebook is our friend here, Paul. Okay, Facebook. Now, if we look at Facebook on a monthly basis, let's get this out of the picture here. No, let's keep this. That's your Fibonacci extension. Okay, one of the things you notice on a monthly on Facebook, actually, let's look at it on a daily first. So daily Facebook looks fine. So what's the upper end of Facebook? First pop, 282, downtrend line, 290. Best case scenario I'm looking at, and this is just my opinion, upside move on the stock. The stock basically goes to a round figure of 290. That's $16 from here. You get $16 in Facebook, you're one happy camper, one very happy trader. All right, what's the low end of Facebook? Low end of Facebook, I would say, is somewhere, I would say, is the 150, 263. 263. Facebook basically is slightly above, $2 or $3 above the 50-day moving average, which is this red line here. So if it, let's say, pukes on earnings, I'm looking at 260 to 263. On the upper end, I'm looking at 290 and a round figure of 300. Not immediately, maybe the day after. Because if Facebook delivers some very strong guidance, despite everything that they've gone through, okay? And I don't need to sit here and explain it. They've gone through a lot. And their overall underlying business, which is advertising, okay, is going strong. And they introduce some new features and stuff like that, maybe some new revenue streams coming in. Then stock will hit 300, and the high for Facebook was 304. So again, this is within a range. The ultimate low end of the range is 245. Can it fall to 245? I highly doubt it. I still think that the support will be captured somewhere between 260 and 265. I mean 260 and yeah, somewhere around 260 to 264. So this is a good, in my opinion, risk reward to play the calls on this. Paul, you want to say any quick things on Facebook? Go ahead.
Yeah, we've been Facebook investors have been anticipating the release of the digital currency that they said they would announce in January, and January is almost over. So if they do get that actually released, that's going to be a huge.
That's what's the name for that? I keep forgetting.
They used to call it Libra or Libra, and then
Libra. Yeah.
they don't. It's not called that anymore. It's now called DIEM, DM.
Okay, DM. Okay.
So yeah, so they revamped it. They took away some of the tier control that Facebook has, and it's more like neutral kind of thing. But it's going to run all the Facebook systems, so it's going to be huge for the company to release that.
Great.
So they said January, and hasn't. Maybe they'll have an earnings surprise announcement on that. Who knows? But the chart I'm looking.
I personally go with the earnings surprise part.
Yeah.
Yeah.
And they have a lot of bad press, and they probably just want to shift attention too, like with the
Exactly.
censoring and everything. The chart I like on Facebook myself, Frank, is the weekly chart.
So give me
I
one
actually,
second. I just want to
yeah,
point it out before I go to the
yeah,
weekly. Here are two things that I just noticed, similar to what I explained on the other charts. Keep it simple. Very positive. Right here. This is the second day of a large green bar expansion on the MACD. So this is definitely a big plus and a crossover. This is definitely a big plus. Okay, stock is getting overbought, but that doesn't mean much. That means there's a lot of underlying strength. It hasn't been fully overbought because this orange line here, the percentage K line, has to move up here. So this is also very good. So the internals, or the internal heartbeat and the blood pressure of the company, is doing totally fine. So just wanted to point that out. Now you wanted me to look at the weekly chart here of Facebook, and that's very bullish. That's very bullish. Now remember one thing for traders and for new people who'll be listening to this, including Michael. Hey JP, how are you? And is the fact that you got that when you're looking at the weekly charts, you have to forego instant pleasure, let's put it that way, because the stock might not necessarily act what it should act right after earnings the next day or whatever, but this is what it'll do the week or two after that. So you got to keep that in mind. You're looking at a longer term view when you're looking at the weekly chart, even though it is giving us signals how it's acting now or might act right after earnings this week. But weekly is for people who are looking a little bit ahead instead of people who want money now. So I'm kind of in the middle with all my trades. I want money now, but I also look at things, going out. So so we're looking at the weekly chart here. This is a very bullish candle. Look how big that is. So this is also projecting to the same numbers that we looked on the daily, which is 289, 290, 300. On the lower end, we are looking at where it started, somewhere around, like I would say on the weekly, the lower end is 254. The range has widened a little bit, $20 from where we are right now. So in that case, this green candle will be snuffed out if they come out with things that the market doesn't like or whatever. There's more sellers than buyers. Then that's what's going to happen. On the weekly, the worst case scenario is 244. I can't justify that, but what the hell do I know? So I'm looking at it from a trading standpoint, the daily chart. Paul is pointing out the weekly chart because this is also quite bullish, and but it points to the same numbers as we're talking about. Fair enough? Okay. Let's take a look at. All right, now let's look at something. There's a lot of other great earnings coming out aside from big cap techs. We have McDonald's, which I'll certainly be. Let's take a look at that. We have Microsoft. Microsoft calls are always reasonable. Microsoft chart is really good on the weekly. It looks like it wants to really break out here of this bull flag consolidation that it's been doing since August. So let's look at the daily. The daily on Microsoft, again, it's within a range right there. It's within a range right there. So if Microsoft does break out, you're looking at 232, which is the high. So you're looking at between 230 to 232. Microsoft generally goes up 4 to 6 points if it has good numbers. All right. So again, this one's a good play. Let's take a look at McDonald's, which we haven't traded for a while. And these lines and stuff were drawn a while ago, so that's why it looks like this. So this is your, one second. Now, McDonald's also, the options really move. So keep this in mind. It's not a boring stock. If you look at the weekly chart, it looks like a perfect, almost a classic perfect inverse head and shoulder. Okay, what's an inverse head and shoulder? Well, you guys mostly know, your people might not. So basically this is what it looks like. Here's your left shoulder. Here's your right shoulder. Here's your left shoulder. Here's your right shoulder. Here's your head. This line is known as the neckline. If it breaks the neckline, the stock is going to shoot up to 230. I don't care about breaking the neckline. I just want it to go to the neckline. So $7 from 213 where it closed at, $7 is very nice. You'll be a very happy camper with your money on this trade. So I'll be looking at close to the money, 215 type of strikes on this baby, on McDonald's. Okay. So this is also a cup and handle. There you go. About to go. And I think McDonald's is going to have a pretty decent numbers. Pretty decent numbers. Okay. There's a lot of stocks, right? So we can't sit here all night, do that. Let's take a look what the hell's going on with GameStop. All right. Stock du jour. And we are legends here because we're trading GameStop. GameStop without getting, read up on it, like why this is happening. There's a lot of stuff out there. This is like the war between the Reddit guys and the Robinhood guys, especially the Reddit board. Okay, I think Wall Street Bets or something like that, and the shorters, and Citron Research, which said they're not going to comment anymore because they're getting like horrible death threats. I mean, it's crazy stuff going on these days, right? So there's an army of traders, small traders who are buying this stock, and the stock is heavily shorted. I don't know what the short position is at this point. I don't know what the short position is, okay? The short position was, I explained on the last webinar, more than the actual float, like number of shares you could buy in the open market. And that's crazy. And that's why the stock is doing what it's doing. This is nothing to do fundamentally. Look, I'm bullish on GameStop. I was bullish on GameStop from $8, $9, $10. You guys know that. I bought a small put after selling all the calls. Now, did I hold the calls all the way when it jumped up to 70? No. Got out mostly when it was $51, $52. It was still a big win. Okay, this is not technically it looks phenomenal. There's no question about it. Okay, technically this is what the stock looks like. So there's nothing about it. It's on fire, like they say, right? But that means nothing, because right now it's a war between the short sellers and notice that the management hasn't said one single word. And the stock was halted 3 times on Friday. So this is what it looks like on the overall picture. Now, on the short term, when it took off, it started right at the open. It was $43. I told you guys to buy it last week. Earlier last week, I said buy the 45 calls, yeah. And I said move the strikes up. Well, in that respect, I was dead right. How the hell was supposed to know that it was going to go to $75? So this is really what it looks like. From a trading standpoint, if the stock pulls back somewhere within the 55 vicinity, I'm closing my puts because that's a nice win. But keep in mind that the premiums are highly manipulated at this point. So in other words, they don't necessarily move with the price. You need a very sharp break below 60 in order to get a bang for your money. And then you see the premium is just jump, 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 jump. I'm talking about the puts at this point. If you want to go long, do whatever you want. I don't particularly want to go long at this point, even though I might for a quick trade, because it's just too bloated. And normally speaking, almost 99% of the time, or maybe 100% of the time, when stocks do this, and they literally double within a couple of days, they generally tend to come down. So this is it's again, I don't want to make a dramatic story out of this. We've been trading the stock all the way from down here, back and forth, then it took off. We did very well on this move. What was it, 2 weeks ago, when those lottos, which were left for dead, went from $2 to 11. We talked about it in the last webinar. I purposely didn't put that option short out because that's obscene. And I don't want people to have like, oh, I'll join Crudosay Trading. He's going to give me 2 cents. That goes to $11. So I'm a very straightforward guy that way. So I don't want to get people into that junkie mode of thinking that they're going to be multimillionaires every 2 days. So I didn't put that option chart out. Okay, from 2 cents to $11. But during the day, we talked about it. We talked about it in the webinars. But whatever the case, at this point, the only way I can determine where the stock can come down to is to do a Fibonacci retracement. Even though it is not a technical play, it might still bow to the powers of, I'm trying to see where I should draw we took off here, so I'll draw it here. It might bend to the powers of Mr. Fibonacci, okay? Fibonacci. So 50% Fibonacci retracement is where what stocks do when they have an outsized move on the upside or downside. You get a 50% Fibonacci retracement, or half the gains given back, and that's $48. 61.8 is $55. So that's the number that I mentioned to you. So my personal thought, if there is no other fundamental development aside from this massive war between short sellers and the fact that it's overshorted, and market makers have to, there are margin calls. Remember, there's no, I think you can borrow the stock. I think it's I'm not quite sure. I mean, about a put, but if somebody wants to borrow the stock to short, I don't know if it's available. If it's that overshorted, then it's, if you want to borrow it, you got to pay a huge VIG or rate to borrow the stock, maybe 16%. So what happens is short sellers are carrying that inventory cost because they borrowed that stock to short. And if the stock goes up like this, they're forced to cover. In other words, it's a short squeeze, right? So this is like a drama. This is like a Netflix drama thriller. So they got a short squeeze. They don't want to buy the stock, but they're forced to do it because they shorted it and it's going nuts. So that's what happens. Okay. So, but this is like out of control. I've very seldom seen it. It happened with Kodak, and then the stock came down big time. Okay, it happened. It happens. It happens in the market. And so, technically speaking, $55, 48. That's what the stock should be. Maybe. I would love to buy the stock if it pulls back towards the 50s. So that's it. Any questions, Mr. JP? Can you hear us, or you don't have a mic? JP is one of our very active traders.
Yeah, I can hear you.
How you doing, boss?
Good.
What do you want to quickly look at before I wrap up? We covered, quite a few things today.
I think you covered.
I covered
about
the ones
everything.
No, yeah. Well, like I said, we could sit here all night, look at things. Let me just show you guys.
Want to look at shop whenever you get a minute, Frank?
Absolutely, sir. Absolutely. Okay, shop looks really good. I mean, really good. Shop calls, keep in mind, this is Shopify, are expensive. But hey, good things in life are expensive, I guess. Shopify as earnings, I don't know exactly when. I can always look it up. Shop, this is your daily chart. Let's look at the internal heartbeats. Looking good. Moving sideways, looking fine. And it's creating, this is the range this was the range the stock was trading in since last June. Lower end of the range was 840. Upper end of the range was 1150. So that's 300 points. It broke out. We traded the stock before the breakout. And at this point, let me try to zoom in. Bear with me. Okay. I believe that Shopify's earnings are going to be fantastic. This is a very tight triangle formation right there, right there. First stop will be 1231. Shop generally moves anywhere between 20 to 40 points when it moves up, on days that it moves up, $20 to $40. This is a big boy stock. Options do move. They're not cheap. I believe the stock will take out the 1285 either pre-earnings to 12. Let's say 1285 is basically 90 points from where we are. Stock can move 90 points as it gets towards earnings. Whichever the case, first level will be another 40 points, which is 1232. I believe that their earnings are going to be very strong. That's my opinion. What do I know? And the stock will hit 13 between 100 points is nothing for Shopify. Believe me, it's not. Best case scenario, the stock will hit 1360, 1350 to 1360. So you're looking at 160 points from here on Shopify. It is just basically, it's a coil spring, cup and handle, and ready to burst out. In the meantime, stock could be down $15, $20 on a day that the markets are down. I can't remember offhand how much, it was 11.98. Yeah, on Friday it was 11.98 the day before, Thursday, and then on Friday hit a low of 11.77. So right there you got 22 points, off the previous day, and then it closed the day at 11.98 towards the highs on a down day, mind you. So yeah, it's a good looking chart, and definitely definitely worth a shot. Last one, one of the other ones which doing really well, this NNDM. Do read up on the company. This is your daily chart on NNDM. Internals are very strong. I mean, really strong. Look at this. Heavy volume buying, acceleration bars. That means more and more buyers coming in. Let's take a look at the weekly. Stock, if this continues the way it's going, this stock basically, like I said, the Fibonacci 50 level is $19.72. Very powerful chart. Yes, it's going to stop at round numbers at 15. It's going to vacillate around a little bit, this and that. But net, this looks pretty damn good. Here was the congestion at the 50 fib all the way back in August of 2018. So if that's where it wants to go, you got nice 6 points, 5 or 6 points, which means you're up, which means your calls are going to go through the roof. We have the February 19, 15 calls. They're doing terrific. They're up about 90% from the time I told you guys to buy it. And stock-wise, you're up a good solid, somewhere between 2 or 4 points. We used to trade the stock down here. Did I notice it again? Some people say, are we too late? I got a couple of DMs. I said, listen, what's too late? You got to, can't always see where it's coming from. You got to focus on where it's going. And at least technically what I can see and what I can see from the price volume as well as all the internals and all the stuff, that the stock wants to go higher. So this is, in my opinion, a keeper, but at the same time, do your own due diligence and all that good stuff, and you're good to go. All right, ladies and gentlemen, it is 10:23. I think we kept it within a reasonable time period today. The session covered a bunch of stocks, earnings season. Let's stay busy. Do not overtrade this week. Take profits along the way. Use the same methods. Scalp. Sit on things you like, but expect volatility. Futures are up about 17 points right now. We covered where the markets can go. Nothing goes endlessly higher before doing a corrective pullback, and then it does its move. It's going to be a busy earnings week. It's going to be a busy political week. It's going to be the end of the month, which is generally a positive, because that's when what happens is it's called window dressing, which you
We
guys
got the
know.
Fed. Got the Fed too, Frank.
We got the Fed too. Thank you for reminding me. That's Wednesday, which is generally a positive catalyst, but you never know. But window dressing is a powerful force where institutional fund managers, mutual funds, primarily pension funds too, but primarily mutual funds, which are the 800-pound gorilla in the market. 800-pound gorilla in the market. They buy to show that they own certain like hot stocks, whatever it's called, buying beta to show alpha. In other words, they have to show excess returns. So they buy these stocks even if they don't own it, just to show they owned it. Okay, so that's a powerful force. The stocks that are doing well, they tend to do better. So that's another powerful force. The Fed is there, of course. We forgot Amazon. Let's take a quick look at it. Let's take a look on Amazon on the daily. Amazon, like actually my Amazon chart is much better on this one. Again, Amazon best case scenario, it's going to take out, it's going to go back to the highs, 3,500. Okay, Amazon calls us super expensive, but they move. All right, that's it. So, so if you're ready to pay up some hefty premiums for those calls, you will get rewarded, but just keep in mind that they're expensive. Let's. This is my. Let me bring it in. This is off my other platform, Quad. This is the one that I use to look at Amazon. So I predicted Amazon actually very right. I showed the chart and I said, you guys can do whatever you want. I wish I had the calls, but can have all of them. I just didn't want to pay that much up for the calls. So here's a symmetrical triangle right there from the top. Come on. There, okay. Here's your downtrend line. This was actually picture perfect. Here's your downtrend line. Here's your uptrend line from the bottom. Guess what Amazon did? Hit the downtrend line exactly right there, and backed off. This back off looks like a bull flag to me, right there. So if it slips and slides a little bit, I believe that this downtrend line will be taken out. There have been numerous analyst upgrades on Amazon from powerful analysts who actually are decent analysts. And if it does break out, you're looking at 3,400. So stock closed at 32.93. Let's call it 33. Another 100 points. When is Amazon earnings? I don't have that direct in front of me right now, but
It's not this week, Frank. It's next Tuesday, I think.
good. If Amazon was this week too, man, it'd be too much. So
yeah, it's
absolutely
next Tuesday after the bell.
good. There you go. You heard it. So
And then Frank, you talked about Nvidia before your call. That's the next week after Amazon. So that Nvidia the next week after that.
excellent. And Nvidia we covered on the last thing. Like I said, 550, 575. I think the stock is good to go. So Amazon, honestly speaking, is normally an outsized mover. So if they do deliver what they have delivered many times before, and if they have a strong quarter with some decent, reasonably good guidance, do not be surprised if the stock goes up $200. Okay, it's happened before. So that means it's in one full soup. It's going to basically go straight up here. All right. And once it gets towards that rarefied numbers of 3,500, 3,560, of course, there's going to be some selling. But I'm just letting you know that this one's looking good too. There's slow stow, which is a very reliable indicator, S stock. The S stock is moving higher. And it looks like it wants to get overbought. By the time it gets overbought, stock should be around 3,400 plus. If it croaks, and they say some stupid stuff, then you are looking again. The stock could very well come down to 3190 Worst case scenario, retest the triangle again, which is 3140, which would be, wow, which would be like 150 points from here down. Is it possible? Hey, look, anything's possible, right? But I'm just simply saying that given what the internals are showing, the stock has more upside momentum than a downside probability. So there you go. There you go. All right. So listen, let's stay awake all week and don't overtrade. Don't have to start trading first thing in the morning. That's one thing I've learned. Okay, you get a big pop on something, you're up. Okay, sell it. Partial profits, full profits, whatever you want to do, but don't have to rush in and buy like exactly at 940, whatever. Market generally, if it's having if it's gonna up move, up open, like it looks like it's going to be tomorrow, generally go up till 10 o'clock. By 10:15, you see the first sell programs come in. All those are, you know, obviously shown on while I'm talking. I'll put up Nvidia. There's Nvidia. So there are certain times. There's no rule, just so you know, but there are certain times that the markets are going to ease back, profit takers are going to come in, machines are going to start selling, and that generally happens between 10 and 10:30. Okay, and it generally continues till about 11:30, 12 when the European markets close, and then our machines take over again in the afternoon and then decides whatever it needs to do. But one thing I've learned is sometimes when you sell, just sit back a bit. There's no rush. You can always get in. Just because something's zooming high doesn't mean you got to jump on it and then buy, and then within 10 minutes the thing's down. Okay, and especially as options traders, you know how fast things can go down. But let's always keep that in mind. So these are things you learn on your own, but I'm just letting you know, just generally between 10 and 10:30, you get the first batch of sell programs that come in. And then you can wait out, and then you see what the markets do after 2 o'clock. And then you can do some buying latter part of the afternoon. Okay, just, you know, again, no exact rule, but I've seen this happen a lot these days. Okay, so here's your Nvidia. This is a very mechanical chart. Here's your pivot line right here. It's exactly at pivot. Looks really good. So Nvidia on the upper end is basically 590, 600. On the lower end, 500. So 50 points up or down. Let's take a narrower measure. 530 pulls back 23 points or goes up 23 points in here. But so far looks pretty okay. Let's look at the internals. The internals are fine. When is Nvidia's? Oh, you told me it was a week after, not next
So
week.
basically 3 weeks from now. It's the same week actually as shop. So we've actually got
Same thing as shop. Okay, yeah. Well, it's good because you need to space out these monsters when they come up with earnings. Otherwise, the market runs out of money. I mean, seriously, think about it. You know what I'm saying? It's like, or even us, like, what are we gonna do? Like, you know, you can't just like buy everything in one go. Most traders can't, and then you can't follow all of them at one go. So it's better that they're spaced out. It's good for all of us, good for our minds. So yeah, so this is actually a macro. Macro simply means that it's got a longer period of time on the technical chart. That's why I call it macro. So this one goes back to June. And if you look at it, all that NVIDIA has been doing is upper end of the range is 590. Lower end of the range is 490 to 500. Middle of the range is 530. Okay. It's a bull flag consolidation for the last 6 months. And that says a lot. Okay, for 6 months, it's been moving roughly about 100 points, back and forth, back and forth. And lately, it's been moving roughly 30 points. Break the box, okay? And I think it will break the box. Go ahead.
Sorry to interrupt. You just made me think of the longer the base, the higher in space saying.
That's correct. The longer the base, and there's a reasoning behind it. The longer the base, that means there's consolidation going on. And at this point, if you look at it since November, it's been trading roughly about 30 points, 30 to 40 points back and forth in this range. We have traded it a bunch of times. And this is what stocks do. This is your macro base for since last November, since last September, actually. And this is since last November. And I think, I'm bullish on Nvidia. So, let's see it goes. Now, keep in mind that despite the technical charts and all that, from my readings and stuff, Nvidia, AMD, these are high, their valuations are pretty high. Even though they are the fastest growing companies in the world, from a general valuation standpoint, they're considered to be on the upper end of the scale. So what does that simply mean in English? It simply means that they got to deliver the goods in a solid way for them to really break out and run. Like Shopify has a very high valuation. Like Apple has a pretty normal valuation, okay, compared to the other tech stocks. But neither is Apple growing at 40% a year or 50% a year, Shopify growing at 60% a year. Okay, so keep that in mind. So saying all that, you guys have been great, and let's have a fantastic week. Let's stay calm. Thank you again. Bye-bye. Good night.
Thanks, Frank.
Anytime.